Hello, everyone, and welcome to another live stream with Ben and Cata. Uh, hello, everyone, and
I can hear
welcome to
myself
another live
double.
stream with Ben and
Yeah,
Cata.
something with your sound, Ben. Hi, everyone.
Hello, everyone, and
Yeah, meanwhile, you are
welcome
trying to
to
figure that out.
another live
Maybe
stream
I
with
can
Ben and
take the
Cata.
lead here. Hi, all. I see already there are some people.
So that should be better.
Yeah, I can hear you loud and clear now. Don't know what happens there in the Netherlands with the sound.
No, everything's fine.
Yeah.
We're
Okay.
still. I
Here
mean,
in
I've got some new
Houston,
gear,
it's
so I'm
okay.
still trying to figure out like this setup. But I think the new gear will be fine now. So hopefully from the next streams, we will.
It was funny. Like it was funny seeing you and Roman. By the way, guys, if you have not seen the smart money concept webinar from Tuesday with Ben and Roman, you should check that out. It's really full of valuable information. However, what I want to say is like when you start that webinar, I see you like putting your headphones down and you're like, okay, we are starting now. We are starting now. I have to say something, and it's so funny. I mean, but yeah, that's the reality. I mean, you have all the time these type of situations, and I like this type of situation. Makes us more human, and yeah,
No,
it's
well,
normal.
exactly, and we're no live stream gurus yet, but
Yes, exactly. Yet working on that,
this
Let's see
is
how that goes.
yeah. So this is the third one. So
Yes, it's the third one. Time flies by, to be honest. I don't know when. I mean, we just started, and suddenly we are now on the. I feel more comfortable as well doing this. Yeah, at the beginning, if you have never done this, yeah, it's a bit of stress. However, now things are start to get on the right path. To be honest. So yeah, also that's because of you guys as well, because you are joining and participating, have a lot of questions, and yeah, we try to answer all of them, as you know, always know.
good
And
afternoon, Crypto Nemo.
yeah,
Welcome
hey,
to the.
Crypto Nemo.
If you're here watching, don't be afraid. Hit the subscribe button and say hello. Let us know who you are. Yeah, this is really an interactive session, so please feel free to ask questions and we'll answer them as quickly as we can. And they don't even have to be super on topic. If you have a question about, especially if you have a question about Altrady platform, don't hesitate. Always ask.
Yes, that's correct.
So
And okay, man, go for it.
yeah, what did you want me to talk about today?
I think it's probably one of my favorite topics, and what I find the most important one. This together with the psychology. So today's topic is about risk management. I think it's something that every trader should really have this risk management in their heads before starting anything that they are trying to do, any trades that you are trying to open and so on. You need to know what you are doing. You need to know your risk, and you need to know how you can do that. And the good thing is that in Altrady, we actually built Altrady platform with that in mind. So Ben, I think thank you for that, and for Roman as well, because he came also with a lot of great ideas. So it's beautiful in the sense that you'll not find in any other place the types of protections and things that we have for risk management. However, I believe we're gonna get to that point
Yeah.
during our conversation. So for today, I will very much like to go deep dive in the risk management, and by doing so, probably just starting like what is risk management and why it's essential in trading, not just in crypto.
Yeah, so let's get a chart with that. Yeah,
Okay.
where I mean, I pressed the right button. Woohoo! Yay me! Look at me. I'm a real host. Right. So we're back in the chart. Oh yeah. That before I forget that trade that we had last week.
Oh, okay. Yes, true.
There,
That's great too.
there it is. It was profit. Woohoo!
And how much profit was?
In the end, it was only 2.2%.
I
Because
think it's a good profit.
yeah, because I got stopped out. You know, that risk management got me already. Like today,
Okay.
we're going to be learning about the ups and downs of risk management, and this had everything. This had the up and the down.
Huh.
But yeah, no, it was a good scalping trade. Literally on the way home, I got the notification saying, "Yay, profit!" So awesome, great trade using the quick scanner and this. But now for the
Yeah.
now for the risk management part, or the big risk management question, Kata. Do you apply risk management yourself in your trading?
That's a very good question. Yes, I'm trying to apply risk management to all the positions that I'm opening. However, I cannot say that I'm like 100% following what I should
Let me
do, to
rephrase.
be honest.
How often do you use a stop loss?
Probably 50% of the time,
Oh, really?
let's say.
Oh,
Yes.
that's more than I expected, actually.
Yeah. So I'm still using, well, I'm not at your level, so I don't have so much, experience. However, I learned quite a lot in the last period, in the last years, let's put it like that. So yeah, when I'm trying to DCA, or I'm not using stop loss, because I do expect that the market will gonna go down, and I'm trying to get that average entry price lower. So probably that will be the ones that, and I have a few markets that I'm always using stop loss, the ones that have low volume, and like for the spike. But for that, I'm still using also the tools that we have in Altrady. So basically, the stop loss cool down, not to trigger instantly and things like that. So yeah, but I'm using around 50%. Probably I'm using the stop loss.
Nice. That's pretty good, actually. No, that's more than I expected because, well, especially because for the people who don't know, Kata is in America now, but he used to work with me in the Dutch office, and then I could see him doing some trades, but he never used a stop loss. He never did.
Yeah,
He was just placing
I
orders.
prob yeah, I just have to be far away from you and have more protection.
Yeah, maybe that's it.
Yeah, but that's true. You're right.
And
Yeah, I was at the beginning.
I'm
Yeah,
also
probably.
curious, like who in our audience is using stop losses, or are you just
Yeah,
DCAing until the price goes up?
that would be a great thing to know. I mean, yeah, there are a lot of discussions about it. So you have people
Yeah,
that they are not
there
using.
obviously there are plenty of ways to do some type of risk
I
management.
yeah, that's true.
But
So probably
the
that's
most common one, of course, will be
stop loss.
using the stop loss. Yeah.
Yeah, that's true.
While we wait for the audience to let us know if they do it properly or not, let's go into why it's even important to do risk management. Always
Yeah.
stop loss. There we go. Always use stop loss. That's good.
Okay.
So in crypto or in trading in general, doesn't really matter if trading forex, stocks, or crypto. Risk management is the only way you can ever be profitable. Because without risk management, you're just gonna lose. Like, yeah, you need to, like, on the long run, it's like being in a casino, right? If you go to the casino, you will always lose money in the long run, and that's because the house has the edge, right? The house uses proper risk management to make sure that every game that you play is in their favor. You might win big someday, but in the end, in the long run, you will always lose. Now, in trading, you also need to have risk management to get the edge over your trading strategy, to make sure that you become that profitable person in the long run. So you will lose sometimes, your stop loss will trigger, but it's all about getting the right risk reward ratio plus the correct success rate. And once you have that, then then you can get on the path of slowly becoming profitable and consistent over time. So that's why it's very important to do that. Someone's asking a question.
Yeah, I was looking at that right now. Yeah, probably.
We can add
And I
that.
like
The stop loss is a decision to execute that you offload to the exchange. If you're managing every position with your own automation, can you not make it more intelligent decisions at that point in time?
That's a question.
If you're managing every position with your own automation, can you not make more intelligent decisions? Yes, if you put the stop loss in place at the beginning, then of course you're giving it to the exchange and it will execute at that given time. But with our automation tools, and I don't know if you're referring to ours or if you're referring to your own automation tools, definitely you can get a better execution based on some kind of criteria. So for example, we have the stop loss cooldown, which we'll come to later. Those things can actually make it better than just a plain stop loss that's already on the exchange. Yeah, good point.
That's a good question. Ben, now I think you explained about the risk management, why it is, and it was a very good example with the house. I believe the problem that I had and the most the thing that I want to always to understand is like, how do I calculate my ideal position size from a risk management perspective?
Yeah, so the let's go to what the risk then actually is, because
Okay.
Right, if we look at let's use the futures market. There we go here. Let's say we're going on a 5-minute chart futures trading. Nice, this is what we want to see, right? Bitcoin dropping. Woohoo. If I set up my position, and I need to use a bit more. So if I entered here, right, then what will be my risk if I don't do anything else and just leave it like this, right? Then ultimately where it can go to is 0. But in this case, we're trading futures, so we're having a 10x leverage setup, and that means that we will never be able to go to 0 because we need to be able to repay everything. And if it goes to 0, then we actually owe them 10 times more than what we have. So that's not that's not possible. But I don't even want to lose 100% of my position, right? I want to manage that risk. I want to be trading with what I can comfortably lose. And what can you comfortably lose? How do you know what you can comfortably lose? That all depends on the strategy that you have. So let's look at some strategies. So if you're using the MACD trading strategy, so you're just trading with MACD, then you only have a success rate of about 30%. And with the Bollinger Bands, if you execute the strategy like we did last week to perfection with the Bollinger Bands, and especially in combination with the RSI, then you get about 66 success rate. So 2/3 of the time you will be winning, and the other time you will be losing. Now, if we then look at the risk reward ratios, then we have a stop loss. So what is the risk reward ratio? So we have a stop loss at -1% and a take profit at 2%. So that risk reward ratio is 1 to 2, right? So 1 to 2, what does my success ratio need to be in order for me to be profitable in the long run? And as you can see in this chart right here, that's only with a 40% win rate. Then you'll be able to get into profit. And of course, if you have a higher success rate, then you just increase your profits. But the profitability starts at this success rate. If you use the risk reward ratio slightly higher, so what most people will tend to go for is at least 1 to 3, then your success rate only needs to be 30%. So only one in 3 trades needs to work for you to be profitable, right? Not break even, actually profitable. because the break evens happen. Like if you do 20% and 1-to-4 ratio, then you'll break even, and then the profit starts at 30%. So that this means that you don't even need to be that successful in trading to be profitable. You do, however, need to make sure that you stick to your risk-reward ratio. So that's where, we'll come to that a bit later to see how you can calculate that.
Okay.
But that's an important thing to remember. And then if we look at the risk size, the risk size is then actually what determines your entry size. So you want to make sure that you have equal risk per trade. Now, what does that mean? That means that if you do, let's say 100 trades, that each of those 100 trades, you can lose only, like if we use the 2% rule, then we can only lose $2 on each trade, right? So it's always the same, doesn't matter like which trade it is. If I get stopped out, I've only lost $2, 2%, right? With that, I can lose 50 times in a row before I've completely emptied my account and I have to start all over again. So that's what we really want to make sure that we have that equal risk so that the strategy can actually play in our favor. Now, then to your question, how do you calculate that? The risk is based on the stop loss percentage, right? When you lose money, it's always because of your stop loss, or at least that's what we should aim for. If you're trading futures, then you can also lose on the liquidation, of course. What liquidation is, I'll explain a little bit later. But generally speaking, if you're using stop loss, especially on the spot markets, that's exactly what your risk is, right? If you have your position size with your total account, so you enter in YOLO, go all in, everything on red, and then you put your stop loss at 1%, then your risk is only 1%. So you can safely go all in on a chart and still only risk that 1 or 2% based on the stop loss. And then no stop loss means that you have 100% risk. So that's not what we want. Now the position size is then what you should use for your trade, and that's based on the portfolio size, or the size that you would use to base your risk on. And then you divide that by the stop loss divided by the risk. Now, we don't tell you to do this yourself, because that's just a nightmare, right? Who wants to do these types of calculations constantly? So how do you know what your risk is using Altrady? Let's go. So again, we wanted to enter here. We saw this for those people who've been watching the stream. Well, actually, no, there is nothing yet. It's too big. I was going to say there's a nice liquidity block. Well, there's liquidity here, so we could have entered here, but not based on this. But let's say for the stop loss right now, right? I want to make sure that from what we've seen previously, I want to put my stop loss under support and resistance levels, and probably even this one right here, right? So now let's look at how much I am risking. So my stop loss currently, because we're at the 5-minute time frame, we're in a small time frame, our stop loss is only 0.24%, right? So if I go all in and I put in everything, then 0.24% with a 10x leverage all in means that my total risk is now 2.4%. Right, but that's too much, right? We want to make sure that's an equal risk, so we should reduce that. But how do we reduce that? Well, you could move the stop loss up, right? Now you can see that the the risk that I'm taking is 1.8%, and if I wanted to keep it at 1%, then I can move my stop loss even higher. But this is wrong. Why is this wrong, Cata? What do you think?
Well, it's easy to put the handle wherever you want on the chart, but you really have to know what do you expect to come and try to understand what's the maximum risk that you can afford to have.
Well, the reason why this is wrong is because you're forgetting about your strategy. Right? If you just say, "Oh, I want to enter here. My strategy says to enter here," right? But what does your strategy say about the stop loss? Well, when we looked at it, when we placed it the first time, we said that it would be here, right? So I can't change these numbers. I can't move this up or down. I can't move this up or down because this is my strategy tells me I need to be here, but I still need to get this down.
Yeah.
Right. So if I wanted to get that down, well, I could maybe do half. Like now I've set half of my total size, and now it's 1.24%. Okay, so that's not, now I'm getting more comfortable, right? But it's still not equal risk, right? Because if we say 1% or 2%, it has to be 1 or 2%. It can't be 1.24%. It has to be equal. Now, the easiest way to do that is to just place it like that, and then Altrady will round it to the highest possible risk that you can take while still maintaining the minimum amounts of Bitcoin in this case that you need to buy. Like I can't buy 22.5 or 0.0225. I cannot. This is not allowed because I can only buy it in steps of 3 decimals.
So that's why when you added there 2%, it changed to 195 because of that.
Correct. Yeah.
Okay.
That's just a limitation, and especially with a 3 decimal position, these steps are quite significant in terms of the risk that then is taken.
Okay, and that's a limitation from the exchanges.
Correct. Yeah. It just every exchange is different. Some exchanges allow you to do 4, 5, 6, even 8 decimals of precision. And then it's way easier to get that as close as possible to 2%, of course.
Okay. So now we have a 2%, let's say. That's our strategy, that we want to reach to 2%, basically.
Correct. But this is then half of it, right? So this is the position size that you asked for. Like how do you calculate that? And this is also about using that equal size for each position, so that you can maintain the risk at the same level and then become profitable over time with a successful strategy. But in order to make that happen, we still need to have that risk-reward ratio. Right now, we only have the risk ratio, right?
Yes.
So how would you get to the risk-reward? What is a reward? The reward is to take profit, of course.
So, yeah.
Right? So now we need to make sure that we can get to that. Well, in this case, we can do the risk-reward ratio of at least 1 to 3.
So 3. Okay.
So putting that up. And why did I place that here? That's because I was looking at the risk-reward ratio that is displayed here. So Altrady gives me feedback on the risk-reward ratio immediately based on my stop loss and take profit. And visually, you can also see it a little bit. So this size is roughly 1/3 of this size.
Yeah.
Right, roughly. So if I do this and I place my order here, then with a 1 to 3 risk-reward ratio, if we go back to the chart or back to the table, what do we need to be? We need to be successful at least 30% of the time to become profitable. Right?
So, yeah, Ben, we have a question, and I think it's important to address this. Lawrence asks, so size moved, not stop loss price to achieve the risk.
Correct. That is very well spotted. Very well spotted. So because we've set the risk, the only parameter that you have. So if we go back to the calculation, this one. If we go back to the calculation, so we have portfolio size, we have the stop loss, and we have the risk. Right? So the stop loss is currently fixed. I can't move that. The risk is always 2%. I can't change that either. So the only parameter that I have left to change is the portfolio size, or the order size, or the position size. Because I can't change the portfolio size either. Like I can add more, but yeah. So the only thing I can change is the position size. And that's exactly what happens. So let me show you again.
Yeah, exactly. Show that again. I think it's helpful for everyone.
So if I change this to 1%, so right now my buy order will be 0.022%, 22 Bitcoin. If I change it to 1, then it's now changed here to, why is this not updating? There we go. That's updating. It's now 0.011%, 11 Bitcoin. So I've halved it, right? And that's correct because I'm now using 1% risk, not 2% risk. So if I increase it back again to 2, then the position size changes back to 0.22. And the other thing that I can also change is the stop loss, right? If I move this, then the position size will slowly change. And because of this weird decimal rounding thing, this one tries to round it. So over time, it will become less. So just make sure that when you move your stop loss, always make sure to check the risk percentage again. It should stay fine on markets with high positions, but on the markets with very low positions, then this will move quite quickly.
That's great, Ben. Look, because all the time, people, you hear them like talking about percentages. So, for example, what is the 1% rule or 2% rule? Pretty much that's the risk. So that's what you have to fill in that box in Altrady. And as Ben mentioned, pretty much the size will change because everything is fixed. I mean, if your strategy is 1% rule, that means that for all your trades, or at least that's what we are trying to do, you always have a 1% risk that you fill that in Altrady, and basically the size will change automatically for you. That's also pretty nice to have.
Yeah.
I have
a question.
Yeah, I think it's not quite related. However, I think it's an easy answer. Blin is asking, it is possible to implement directly in Altrady trading menu the following. Entering a limit order, say a long, at a price above the current price. Currently, I do it via TradingView alerts. So
creating
that can be
a buy order like this?
Yeah, above the current price.
Well, no, not from the right click menu, but you can do it.
Yeah.
With
exactly.
Altrady.
Yeah.
You can do it 2 ways actually. You can use the stop limit, where you put the stop order above, because that's exactly what will happen. With the take profit. That's one way of doing it, and this would place the stop limit order on the exchange. Now, if you want to place it, you can also use a stop market order, of course. Then it will be a buy order above the current price. If that is hit, then it will be executed against market value. That's the other way. And then lastly, there is another way where you can use a limit order. Don't do this right now, because Cata, what would happen if I put the buy order above the current price?
Oh, we are done. Losing.
It buys
Buying
immediately.
high. Yeah.
It buys immediately. So we put the start position at function.
Yes. Okay.
And we can do that by placing it like this. And if the start position at price is reached, then it will place the limit order. And then what would happen? It would execute immediately against the current market value up to a limit of where you put your limit order.
Yeah, that's the one that I was thinking the first time when I was reading the question.
Yeah.
Because yeah, it's the way I'm using it. So yeah. And we have just another question. I mean, I don't know if it's a question or a suggestion from Lawrence. He mentions that potentially let users set their desired risk that does not change, with actual risk that is allowed by size and price granularity being displayed to the side. Don't fluctuate the user's target. So potential that users set their desired that does not change, with actual risk that is allowed by size and price. Yeah. Okay.
The risk doesn't really change, but the reason why it changed now, when you change anything from the price orders, is because of that rounding thing. So on markets with a lot higher precision, you wouldn't have that problem. So the risk is fixed. Once you type it in, the risk is fixed to 2%.
Okay. Ben, I'm thinking we talk about stop loss and take profit, and I do remember last webinar we had someone talking about like oak order, and we kind of said like we probably gonna have that. Maybe we can, because they are part of the risk management, stop loss and take profit, and maybe try to explain how that works for people that they don't know.
Yeah.
I mean,
So the OCO order is also called the one cancels the other order. And typically, so it depends a little bit on what exchange you're trading on. Not every exchange that we have supports that. So we can only support what the exchange supports. So if we go over to the Binance spot market, then we now have the OCO order. Basically, just quickly show you what the OCO order is. It's a limit order. So you will buy below, but you can also set a stop limit order above the current price. So the reason is limit orders normally go under the buy price or under the current price. Stop limit orders go above. That way they don't execute immediately. If you change the order around, they will execute immediately and eventually defeating the purpose. Now, most people will want to do this with exiting. So they are in a trade, so they're in this trade and they want to exit with that. So they do the OCO order with limit price. So you set the sell and you set your stop limit there like that, and then the sell order there. Now this means that if the price goes either way, one of the orders will be triggered, and they only use the funds once. Normally on a spot exchange you can't really do this because the sell order will reserve your funds that you can't use for the stop limit order, but using the OCO order they give you that opportunity. But Binance is one of the few exchanges that supports that. So it's very difficult to do that with other exchanges. But no worries, we're here. I can show you exactly how to do it with Altrady. Because essentially what it is, you're entering the position, right? So I can actually do that, no worries. I've now entered the position and now I want to set up that OCO order, but I don't have an OCO order. So I'm on an exchange where I don't have it. So just pretend that this function is not there. How do I do that? By using the Altrady smart function. Well, effectively what it is, it's a take profit order with a stop loss. So what I can do is I can say, okay, I'm going to add my take profit order. Now in this case, I started it manually. I did not set the take profit order and the stop loss when I placed this entry order. So that's why this notification comes up. You want to convert it to a smart order. And then I say, yes, I do. And now I can set my take profit. And the other thing that I wanted was that stop loss. Hey, this looks familiar, right? So my entry is filled and I have a stop limit order below and I have a take profit up here. That's your OCO order. The one cancels the other. So, and this is available on all exchanges. Everything that we support, you can do this.
Yeah, we had a lot of people asking about, do you guys have OCO orders and so on? And we're like, yeah, we have more than that. I mean, because now we have just one take profit and one buy, one sell, and so on. You can actually use, and you have way more power with.
And that question is really also related to the risk management, of course, because if you have to pick between take profit or stop loss, which one would you pick? Well, most people tend to pick the take profit, and then they don't have their stop loss. Or if you're better in managing your risk, then you will use a manual trailing stop limit. But that's just a lot of work, right? And then with normal OCO orders on the exchanges, you cannot add more than one take profit target. You cannot place more than one order that is linked to the same stop loss. You would have to split it up yourself. You would have to split up the take profits with so you will get more stop limits and more limit orders at the top. And that becomes very messy when you have more than two. Like if you go for three, then that becomes very messy. So using the Altrady system for take profit with stop loss to replace the OCO order is definitely the way to go. This is why it's so powerful.
Yep, that's great. I'm checking right now, Ben. So it seems that we don't have any questions for now. If I have to think of what we discussed mainly, we talked a bit about what is risk management, why we need it, how we can calculate our position, and then understand then when people are talking about 1% rule, 2% rule, that's actually referring to the risk that we want to take. The fact that actually position it's changed the size because we have the stop loss and the other one they are fixed. And this is great.
There's even more.
Tell me.
There's more to it. Because this is your basic risk management strategies that you could perform effectively on the exchange itself, right?
Okay.
But we have more functionality, right? So in order to increase your success ratios, for example. So let's go back to setting up this position again. And I'm just resetting the form quite often and setting up these positions again because I just want to show you as much as I can how I do this so that you can see how easy it should be, right? If you're struggling, watch these videos, see how I do it. There is a logic behind every button, and it should work very quickly. But the other thing that we have, and I talked about this last week, is the protection function, right? Especially if you have more than one take profit. Well, actually, only if you have more than one take profit. Because then you can use that to set your stop loss to break even, right? And that's exactly what happened to the other trade, right? I did that on this chart. We're here, right? So my take profit was hit, and then I moved my stop loss to break even. Well, actually, I moved it up a little bit higher manually, because I saw that it was going higher, and I wanted to lock in that profit, right? I saw at some point I was at what up here it was about $20 profit or $15 profit. I was like, I need to keep that in. So I moved it up a little bit higher. But automatically it would move to break even. So it would have sold somewhere around here on this bounce or on this reversal. But if I hadn't done that, I would have sold here probably, losing more money. And if the price had gone even further, so if it didn't make this move, if it went all the way down here to grab liquidity up here, down here, then I could have turned my position into a loss, or I could have hit that stop loss and basically broke even, right? That's not what we want. We want to make sure that we win as much as we can, because if we see at that success rate, if that success rate goes up, then my risk reward ratio can come down a lot, and I still profit the same amount of money based on the risk reward ratio. So that's what we're looking for. Higher success rate, that we can stay in the game, continue with churning in those profits consistently, right? That's the key to success. So back to this one. Should still be there. There we go. Trade form. The break-even one. And then another one would be to have the stop loss cooldown enabled. So if you don't have that, this is stop loss cooldown. Another way to manage a little bit of risk. Is there a save as preset from? Oh yes, the preset, yes. So once I've set this up, I will show you exactly how to do the preset. So with the stop loss cooldown on, this effectively would give the stop loss a timeout. So when it's hit, it will wait X amount of minutes before it's executed. Now this is important to understand, that if you're trading equal risk based on the stop loss, using the stop loss cooldown can be tricky, because in those 5 minutes, the price can drop a lot further, like what you've seen right here. So what we've seen here, in 5 minutes, the price dropped over 1%. Or in 5 minutes, it was, what, 0.3% still. Quite significant drop for a stop loss that is at 0.21% or 0.021%. So using the stop loss cooldown in this case will increase your risk. And ultimately, in the long run, this can also increase or reduce your risk to reward ratio, because if the stop loss gets executed here, then what happens to my risk reward? It gets halved, right? So that's a thing to keep in mind. If you're using the stop loss cooldown, understand that the price can go further down, and you need to have a higher risk reward ratio in order to still counter that 1-3 or 1-2 risk reward ratio based on the success rate of your strategy. And then to make sure that it doesn't go way out of whack, then using the emergency stop loss would be required to actually minimize the extra risk that you're taking. So the first risk is here, second risk is there. And that's exactly what we show you right here. So with the emergency stop loss cooldown enabled, then my risk reward ratio is still 1-3. If it's just the first stop loss, it's a 1-6. But just with the emergency one, it's 1-3. So this is okay. This would be an okay position to take if you have a high success, or if you have a high probability or high enough probability for this to actually work, right? We can't just place these orders willy-nilly and say, oh, I'm just going to aim for 1-6. Because if you're aiming for 1-6 without it actually happening, then your success rate just drops to maybe 10%. So you can't just decide what risk reward ratio you need, especially if you're doing price action trading, and especially also if you're going to be following our webinars about the smart money concept. Then your stop loss and your take profits and your entry are determined by the strategy, right? And you either take the trade if it has a good enough risk reward ratio, and if it doesn't, you skip on the trade. That's the important thing, right? So risk management also is about being able to walk away from a trade. Don't get FOMO, don't get fear, and like, I want to get into every trade as possible because I want to maximize my gains. But always make sure that you stick to your strategy with the risk reward ratio that is associated with the success rate of your strategy. Super, super, super important. Can't stress that enough. Someone said you...
Yeah, we have another question about, and actually it's a good question because, I think you can explain that actually they have everything unified in Altrady, so they don't need to bother. You mentioned different exchanges allow different order types. Do you have anything that shows the types of orders for each exchange? I'm with Coinbase and want to play shorts if possible.
Well, in this case, so this is I'm on Binance Futures, so I can go long and short. For Coinbase, we currently only support Coinbase Spot. So shorting is only possible if you already own the coins and you expect them to buy back lower. So for example, if I'm on if I'm on this market right here, if I own BNX, well, I don't. So let me take this one. No, that's yes. Now I'm at the right market. If I own the coins, I can short them, or it's not really shorting. It's selling them to buy them back lower. So I can sell here and then put my take profit, which is then a buy order right here. That's effectively shorting the market on a spot exchange, which is what you can do in Altrady on Coinbase. So this is Binance, but it's the same on Coinbase. But you need to own the coins first. So in this case, most people will own Bitcoin or Ethereum and would like to increase their stacks of that. You can by selling it higher and buying it back lower with a take profit. And obviously every functionality works. The stop loss you can set right here. Risk reward ratio is there. Risk management is there. Everything works the same as it would for a long position. And it doesn't matter that you're on a spot exchange or a futures exchange. As long as you own the coins on a spot exchange, you can short the market. But back to the futures exchanges. We had this position and I forgot to talk about the preset, because this is now a very complex setup. If this fits my strategy, I want to be able to place that within a matter of seconds. So I can create the preset and I can say 3 take profit, 1 entry, 3 take profit, 1 stop loss plus emergency stop loss. That's searching, adding it, preset name. Then I can assign it to a hotkey. So let's say my command key +4. I can make some adjustments in percentages. Set the stop loss or set the take profits at specific price offsets and all this information. Save it as preset, cancel edit, and then if I press Command 4, then you see that the position is placed and I can make those adjustments. So even if the strategy, is price based and not percentage based, then I can quickly just change the prices and put them on the correct support and resistance levels, and immediately check my risk reward ratios. If they're okay, I can place the order. It's a great way.
Yeah, it's a very fast way to place the orders and just adjust them a bit if you really want.
Yeah, I mean, if you want to do it quickly, then I mean, how quickly can you set up?
Yeah, but also we have to let people know that actually you have to have your mouse on top of the terminal part. If you have it on chart, I think it's not working if you do like the command keys. That's correct, Ben?
Sorry, say that again.
So if you want to place the position right now, okay, you need to if you are right now on, yes, you need to have your cursor on the right side.
Yes, yeah. If you're in here and you're clicking around in here, then if I'm pressing the button now, nothing happens. But if I just click on the trade, click on the trade form, and then press my
exactly,
and it works immediately. Yeah, that's correct. Good point.
Awesome. We have another, maybe take that one because it's in Dutch. Another question, and probably we can move forward afterwards with even more.
Yeah, the question is that it would be nice for the signal bots to on a sudden move down or a very heavy bearish signal, that the bot can automatically pause so that you don't see your profits evaporate. Is that possible? Well, currently we don't have any signals for that, so we don't have the sudden price movement connected to the signal bots. What we do have though is the ability to pause your signal bot as soon as it hits one of your stop losses. So if one of the stop losses is hit, then it won't open up another position for X amount of minutes. So that's something that you could do. So you will lose on your one position, but at least you won't open up 10 that will be losing, because in crypto we see it a lot where if Bitcoin drops, everything drops, right? So if you have a signal for Bitcoin and it hits your stop loss, then most likely the other 5 signals that you have will also trigger your stop loss. So and then signals following after that will also trigger the stop loss. So that's using that cooldown feature for stop loss is great. And I can show you that quickly. So go over to create signal bot, and then those are here. So cooldown after opening, meaning that you won't open up 5 positions at the same time. Cooldown after stop loss will pause your bot after the stop loss is hit for X amount of time.
Awesome. Yeah, I think we can move forward and talk about another topic, and that will be probably diversification in risk management. I mean, don't put all the eggs in the same basket.
Well, yeah, this is risk. So we've been talking a lot about risk management and trading, of course, but also what you can do with your profits is you can reinvest them, right? But if you reinvest them in the same strategy, then well, if you're very successful, then that's maybe a good idea to do. But what a lot of traders do is they actually use parts of their profits to put aside and diversify that into different types of portfolios, right? So they would use that to dollar cost average into Solana, for example, or Ethereum. So they trade Bitcoin USDT a lot, and their profits go into Ethereum and Solana, so that they're hedging against the Bitcoin movement and profiting from alt season when that finally picks up, which we've been waiting for several months. But it's coming, guys. It's coming. Yeah, so diversification is a great way to manage your risk. Don't put all your eggs in one basket. Is for within your strategy, but also based on your total trading stuff. So if you're trading crypto, then also make sure that you invest. I made most of my money from the investment. So I trade to earn more of Bitcoin, earn more of dollars, and I reinvest those into long-term positions that generate a lot of money. Like, and you don't have to worry about them. Like they're long-term positions. The longest one I have running is about 2.5 years in Bitcoin. Like I bought Bitcoin, I invested my Bitcoin way back. It started here again. So selling the profits all the way up here, getting a nice basket of dollars, and then reinvesting it in there. And that doesn't mean that I've only traded this market. I trade every market to accumulate either Bitcoin or dollars. And then I reinvested my dollars, for example, back into Bitcoin. And I'm riding out this wave. And yeah, my take profits will be for the long-term take profit. So even though it's a long-term investment, my long-term take profits will be around this level, where I start to reduce that position, that long-running 2.5 year position will start to be reduced right here. So that's so diversification inside your strategy, but also diversification inside your trading strategy as a whole. So multiple things at the same time.
Okay. And you mentioned that, I mean, like for that position that you have it for like 2.5 years, definitely I know for a fact that we had like very volatile markets. And I think that will be my next question, like how you handle risk management in volatile markets.
Yeah, so what I just explained with the long-term one, then the risk management is solely based on dollar cost averaging. But in the volatile markets, that's exactly where this stop loss and the tight stop losses and sticking to the strategy is super, super important. So again, take profit, stop loss. Don't even think about it. Use it, right? If you're doing these long-term investments over time, you don't need to put a stop loss. Like, that's not what you're interested in. Like, I started buying around this area and I didn't put a stop loss here. I bought more here, right? Around the 16,000 level, I bought more, making my average entry in this period around the 20,000. So yeah, in that period of time, well, actually it was 20,000 right here.
I do remember that we were in the office together when you were buying. I was able to buy at 16K or
Yeah.
almost 17 actually.
Well, that position is currently up about 5 times of what I put in. And
yeah, same here.
And that's exactly how I make most of my my capital. So I trade in these things because I want to participate in the market. I like trading, but then I reinvest that and diversify into a long-term investment portfolio.
Yeah, it's funny. Jerome says, "So your BTC are on a centralized exchanges since 2.5 years?" Yeah.
No, again,
Yeah,
risk management.
exactly.
Risk management.
Yeah.
My Bitcoin is spread out over lots of exchanges, wallets, cold wallets, you name it. It's scattered all over the place. But I have Altrady. I have Altrady.
Yeah, it's easier. It's easier to manage all of that.
With my portfolio,
I mean,
where I can add all my wallets as well. So I still have one overview of all my holdings. How amazing is that? So
yeah,
from one platform, right? I know
that's sweet.
exactly the total size of my portfolio by just opening
Yeah.
up Altrady.
And yeah, I think we covered a lot this session, Ben. Probably okay. Yeah, I want to know what are the most common mistakes, for example, that are done when people are trying to manage their risk.
Sorry, I was just reading a question because maybe we can take that one first.
Yeah. So I was thinking then, okay, is there an advantage to use Altrady TradingView alerts and not TradingView alerts directly?
Yes, there is a huge advantage of using Altrady price alerts compared to TradingView alerts. It saves you money. You don't need TradingView. If all you need TradingView is for charting, for drawing, and price alerts, cancel your subscription. Use Altrady. It saves you a lot of money each month.
You don't need it. That's true. I mean, unless you're doing Pine script, then you don't
people
need
say,
it.
but then people say, yeah, but I use it for Trendline alerts as well.
Okay, let's do that.
Guess what? We have Trendline alerts. We have them all. It's great.
And by price,
price, yeah. We also have time alerts, by the way. Not many people use it yet, but it's nice, right? You could just set a timer alert, so you don't have to put it on your phone and say, oh, I need to check this market back in several hours. Yeah, just set the time alert, right?
Yeah.
So especially if you're trading on smaller time frames and you're doing the smart money concept trading, then a lot of it will involve in setting up a time alert or setting up a price alert and then waiting X amount of time with another time alert and a price alert. And yeah, using these alerts will just help you to only be triggered when it actually is required to look for things. Yeah,
that's true. Okay, I think we can take some questions after the idea of trying to understand, what are the most common mistakes in risk management.
So yeah, the most common mistakes in risk management is not the basic one is just not using stop loss, right?
Yeah.
That's that level. We've covered that so many times in this hour. Always use that stop loss if you're trading with the strategy. If you're doing portfolio growth investment, okay, I understand. But when you're trading, I'm not investing, trading, then you have to use that stop loss. And find that strategy that works for you. A lot of people say, well, my strategy doesn't require a stop loss. I just DCA until I'm out. Trust me, I've done it for years. I can show you my DCA efforts in. Actually, I can show you right here. I have one. Qcoin spot. Was it this one? Oh yeah, yeah. My DCA efforts. Yay! I'm on the slippery slope all the way down.
Yeah.
How much down? How much down?
Enough.
Painful. This was a clear example of not using that stop loss and just keep DCAing until you. Like I could have exited here, I didn't. But
Yeah, that's true. Because always, and probably that's another error, we are not sticking to our strategy. I think
actually,
that's
no, I
the
couldn't. I could not exit there because I bought here, so that's why it's lowered now. But if the price continues, and we're hoping, it's possible. Like it made that move before, but it's effort, and this is not risk management at all. This is risk management done wrong, and I take full responsibility. Hold my hand up. This is not how you do it.
Ben, no, okay? Don't
No,
do that.
bad ban, bad ban.
Bad Ben. Look, that's cool. Look, Kryptonimos says that when I set an alert on a trend line and want to delete it, it keeps coming back. Why is that? It shouldn't, I think.
It shouldn't. No, if you set an
Yeah, that's
alert,
why it shouldn't.
like if I do that and I set the alert and I hit save, then when I click it, it goes into edit mode and I click it and I can delete it, and now it's gone and it doesn't come back.
Yeah. So maybe
Like
you
there are slightly annoying things with, like, I understand. So you have to select it, you have to click it again, save it, and then to click, and then we need to put the delete button here. Roman, if you're listening,
Yes,
we need
cool.
to put the delete button here.
Roman. Yeah.
Roman, are you out there?
Yeah, exactly.
But then you have to click it again, and then you can delete it. But that's just because we're kind of hacking this inside of TradingView. They don't really like us doing this, but we're doing it anyway. Roman says it's on my list.
Do a reload. He said, look, do a reload now.
Okay, sure. It's not there.
Yeah.
It's not there.
Okay, so Roman is with us. Good then. Okay, cool. Another thing, Ben. George says these webinars are good to follow and very welcome. George, thank you so much. I mean, please share all these webinars with all your friends and everyone. If they can do that, will be very helpful. I believe for both sides, for us, because we will be well known in the market, and because the other people can learn all the things that we are sharing. And another good thing is maybe we can show them the referral part, Ben. If they can share how they can share the position in Altrady, I think that's something good to to have.
Shall we share my shall we share my ridiculous position?
Like, yeah, how you can do that, and that works as a referral. So if you guys want, so basically you have that share button that Ben will click right now.
You click on it, and then you can see all the trades that are in there.
And you have the option to show your amounts or not.
Yeah, you can just hide it. In this case, hide it because it's
yeah,
I'm gonna cry.
And then
it's just a demo account, people. It's a demo account. Relax, it's fine.
Yeah. And if you click on X, then basically it will on Twitter.
Yeah, then it would go into Twitter. Like, I don't have it open now. I can click it, but
okay, you don't need, so it's fine. But you know that you can actually share your chart and everything on Twitter, and that works as a referral. So keep that in mind.
So what I have to do, right? So this is my loss, 1,500. All I have to do is make sure that 150 people buy the subscription based on this chart, and I've made my profit.
Yeah.
So you don't need to be profitable in trading to earn money. You can just share your results.
That would be another strategy. Yeah?
Well, I mean, people might find it funny, like when they see this and they're like, "Jesus, what was that guy thinking?" Oh, you could share your losses and still earn money, right? That's great.
Okay. Yeah, I think we covered a lot today. Yeah, I mean, there are a lot of things. Thanks for that. I mean, yeah, for me also was that thing with the size was really relevant. I believe for many people that was a bit unclear until now.
Well,
So yeah,
and
I
if it's
think
still
yeah,
unclear, we'll be happy to reiterate and talk about it so many times.
yeah, that's true. If you guys think that it's something that is not clear or we should explain better or whatsoever, just let us know. Uh, Rafa, yes, nice widgets and tools. Thanks, Rafa. That's true. We are doing our best. Um, so that's good. Actually, we have to say that we see some of our team as well joining here, which is pretty awesome. So yeah, happy to see you guys. Thanks for everything that you're doing. Ben, I don't know. Do you think it's something else, or we can
We can
close this
start
up?
wrapping it up, but I do like to
Yeah.
mention if you haven't seen our webinar with the smart money concept with Roman, who was just hijacking the chat for a minute, check it out. It's a very, very interesting way to learn a new strategy that has a lot higher success rate than most people's strategy. Um, and we will be explaining you everything from the start. I'm new to that strategy. I'm learning it. Learn with me, and you will learn a lot. So please I invite you to watch the webinar from last Tuesday and join us again if you can live next week, where Roman and I will have prepared another good webinar about the smart money concept.
Awesome. Well, thank you everyone, and yeah, keep spreading the news about what we are doing here. Thank you so much. Have a great day, evening, wherever you are.
Thank you guys. See you again.